Well, we all know interest rates are pretty high right now, and now we're seeing record high online searches for home equity loans and what's called HELOCs, H-E-L-O-C. Well, this comes as homeowners worry about trading in those lower rates they locked in over the pandemic, a number of them. Here to tell us more about this, financial advisor with CapTrust, Catherine McCall. Good morning to you, Catherine. Good to see you again. So I know interest is high for home equity loans, and then there's HELOCs. Why is interest so much higher now for these types of loans and lines of credit than in years past?
Well, they're going to follow mortgage rates and always be less attractive than mortgage rates, but they're honestly being searched more than ever right now because they're more attractive than folks refinancing their homes. Let's say you owned a home back in 2021 or 2020. You have a 2.5–3% rate mortgage.
Right.
If you need extra cash or equity out of that home, you're certainly not going to go refinance that. You'd rather take out a little HELOC or a home equity loan. Those are two different things. In order to use maybe a home remodel, $50,000, even though it's going to be at a higher interest rate.
So tell me the difference. Okay, so what is a home equity loan, first of all?
A home equity loan, well, they're very similar. Okay, so they're both mortgages on a second mortgage of your home.
Right.
So we're really talking about after your primary mortgage, the second mortgage. A home equity loan is a fixed rate loan, and it's going to have a fixed payment to pay back, right? So no matter what, you're taking a lump sum out, and then you have to pay that back over time.
Are there variable amounts of time that you have to pay them over, or are they always locked in like at 30 years or something?
No, it's going to be variable as far as how long you can decide how long you want to pay it back over. A HELOC, or home equity line of credit, is really more like an enhanced credit card against the value of your home, right? So that's going to have a depending amount based off of how much you take, and you don't have to take it all at once.
So it's not a lump sum necessarily?
It's not a lump sum. Most people use it if they are not sure how much they're going to end up spending on like a home renovation. So you can take a little bit out and take a little bit more out. Then they're going to be at variable interest rates depending on where rates are as you take the money out.
Any penalty for paying these back early?
No, it's actually better to pay that back early because it's going to be a much higher interest rate than likely your current mortgage.
What would be the downside of taking a home equity loan or a HELOC?
Really, you're just talking about extra debt on your home or on your house. So if your goal is to retire sooner, having that extra debt is just going to eat into your costs over time.
What are the interest rates on these? I mean, clearly they're not going to be like what we saw a few years ago.
Right. So if right now your mortgage rates are going for about 7%, we're really seeing home loans and home equity lines of credit 8.5%. But if you're taking a smaller amount of dollars, it shouldn't be quite as bad.
It's almost like you're paying yourself to remodel your kitchen, sort of.
Essentially, you're using the equity in your home to enhance the home.
Yeah, makes sense.
So,
all right. Always good to see you. Thanks so much.
Absolutely.
Good information. Brittany?